Imagine a world where you skip traffic entirely, not by taking a detour but by flying over it. Archer Aviation is trying to make that dream a reality. But here's the real question. Is Archer building the future of transportation, or is it still years away from liftoff? Stick around because by the end of this video, you'll know whether Archer's stock deserves a spot in your portfolio or a hard pass. Hey everyone, it's Robert. Welcome back to The Alternative Investor. Today, we're diving into one of the most talked about stocks in the electric aviation space, Archer Aviation. If you're looking for cutting-edge tech, massive growth potential, and a company riding major macro trends, this is one to watch closely. Make sure you tap that like button and subscribe because today's story is anything but ordinary. What is Archer Aviation? At first glance, Archer sounds like just another electric vehicle startup, but are they actually on the edge of something bigger? Archer Aviation is building eVTOL aircraft, which stands for Electric Vertical Takeoff and Landing. Their flagship model, Midnight, is designed to carry 4 passengers and a pilot at speeds up to 150 miles per hour with a range of about 100 miles. Unlike traditional aviation, Archer is aiming to connect cities in a way that bypasses roads entirely, creating a whole new category of transportation. And they're not just talking, they are actively building and flying prototypes right now. The big question with companies like Archer is always the same. Can they survive long enough to succeed? Right now, Archer is still a pre-revenue company, reporting a net loss of about $110 million in the last quarter, but they also have around $425 million in cash and short-term investments, enough to fund their next stages of development without immediately raising more money. They are burning cash fast, yes, but this is by design as they invest heavily into certification, manufacturing, and research. If you're wondering whether Archer has real backing or if this is just another pipe dream, their partnerships say a lot. United Airlines has committed to a $1 billion conditional order for Archer's aircraft, with an option to buy $500 million more. That kind of vote of confidence is rare in an industry this young, and it doesn't stop there. Automotive giant Stellantis is working directly with Archer to mass-produce their aircraft when they're ready to scale. This is one of the few eVTOL companies that already has real manufacturing muscle lined up before going commercial. Regulatory approval is the make or break point for any aviation company, and Archer knows it. They've already secured their G1 certification basis from the FAA, outlining the key safety and design standards they must meet. In 2024, Archer began piloted test flights, marking a huge milestone toward full certification. They are aiming for FAA-type certification potentially by 2025, and if they pull that off, it will open the gates to commercial operations faster than most competitors expect. For investors looking to generate income while they wait, Archer might offer an interesting opportunity. Because Archer's stock is volatile and actively traded, running the wheel strategy could be a smart move. Investors can sell cash-secured puts at lower strike prices to potentially acquire shares at a discount. Once assigned, they can flip around and sell covered calls against their shares to collect steady premium income. With implied volatility elevated, the premiums on Archer options are attractive, giving traders a way to profit from the stock's ups and downs while still betting on the long-term upside. It's not a risk-free strategy, but for patient investors, it could turn Archer into an income machine while waiting for full commercial launch. Of course, even the best vision comes with major risks. Archer is still burning through cash and remains at least a year away from meaningful revenue. FAA certification is not guaranteed, and any delay could crush timelines and hurt investor confidence. Competition is fierce, with Joby Aviation, Lilium and others fighting for the same airspace, and broader macroeconomic conditions, like rising interest rates or tighter capital markets, could make funding future growth even harder. The real question is, what gives Archer a fighting chance where others might fail? Unlike companies chasing long-distance or niche aviation markets, Archer is focused on short-haul, high-frequency urban routes, exactly where demand could explode. Their manufacturing partnership with Stellantis gives them something most startups dream of, the ability to scale production fast and cost-effectively. Their partnership with United Airlines gives them instant credibility with customers and investors alike, and their early lead in regulatory approval could allow them to be one of the first real players to market. Is Archer Aviation building the future of transportation, or is it too early to take off? The opportunity is massive, but the risks are real. For investors with patience, a strong stomach for volatility, and a belief in urban air mobility, Archer could be a stock worth holding through turbulence. For others, it might be wiser to wait for certification milestones and early commercial proof points before getting on board. Now I want to hear from you. Are you already invested in Archer Aviation, or are you sitting on the sidelines until more proof comes in? Drop your thoughts down in the comments. If you found this breakdown helpful, don't forget to like the video, subscribe to The Alternative Investor, and I'll see you in the next one.